focus on the image, doing a peer review. And you suppose you work in a bank and you have to analyze financial position and performance. You have to estimate the success for because I guess you will have Excel yes, for files, and you have to compound. So it won't be a problem because for me will give you the model, yes, and you will pay me for the models. But you will have a client that comes to you with and this with financial statements, yes, and you know that in accounting everything is possible. One plus one. Yes. In accounting, this is perfect. So you have to decide if financial statements gives a true and a fair view of financial position and performance. How can you assess that? They present the true and a fair view. Because I don't know if you will be a specialist in accounting, so you will use just financial analysis. So you use financial statements. But how can you assess if those financial statements present the fair image of the firm? How? No. Yes, you use ratios to determine the status of the firm. But how do you decide if those information that are presented in financial statements were correctly determined and presented?
Compared to the law.
How?
Follow the law, the regulation.
Yes, and how can you decide if it follows the regulations? Because in accounting, as your colleague says, everything is possible. We have alternatives.
What for details?
Detail what?
Financial statements, and after that, you just check.
And they can give you, voila. You have time to decide if you give the credit or not. You have time to see all the papers, the balance sheets on them. Stuff. But it's very simple in practice. You have just one page to look at. One page. That is what? No.
The annual report.
If you want to see the annual report, for example, Suri France, because they have almost 600 pages. 600. You don't have time to. You have to decide because you work in a bank and time is money, and you have to decide if you give the loan or not. So you have to see just one page. One page. Yes, you have to read the report and to see the opinion of an independent and objective and a professional person that presents and certified that financial statements were obtained. Were obtained by the firm with respecting the accounting standards. So you have to look just to one single page. Audit report. But the auditor report. But how can, or what represents the audit in India, the auditor as a profession? Yes, the agenda will present this concept, auditing, from its beginning to the present moment. We'll talk about the typical international standards on auditing. Then, what is the most important for a bank, the audit report, audit evidence, and audit procedures. And then I will describe the process. Auditing, and also I will give you some reference. Right? So, what means accounting and what means auditing? Accounting, as we know, the process records data and present financial information. And we have the two directions: financial accounting for investors, for stakeholders, and management accounting, cost accounting, yes, for internal decisions, and internal control, okay, and auditing as a process of examination, and in final, the auditing and the audition gives the opinion regarding financial condition and performance. And you have the audit opinion that describes if the financial statement were prepared respecting an accounting regulation or accounting framework that is applicable for a certain economy. So, what is interesting in auditing to assess the quality of financial information. If financial statements contain errors, if financial statements contain frauds or not. That's the work of the auditor. How much it costs an auditing mission? How much?
About
200,000.
Okay.
is it a standard price or is it
No.
that for example?
You don't have here. You can look at it. For example, for Facebook or for April, because as a mission, the auditing mission for an audit report, you have to prepare at least 240 hours per mission. But for a firm as an international or a multinational firm, the time increased. And for example, in 2010, I guess, the audit fees for a firm was April. I guess there were $9 million. I guess $9 million. I don't know if it's a great sum or what. 9 million.
Wow.
For April, but the opinion cost. So why auditing, and what are the explanatory theories? For example, in the past, persons decide to have an audit mission to detect fraud. And we have this policeman theory that to on that. And he decided that the auditor should act as a policeman to detect fraud. That was an important objective auditor. And in the period of Enron, WorldCom, the auditor was paid large or audit fees to detect fraud. That was their mission. Then we have lending credibility theory. And here we can talk about the report between managers and investors, because managers or their work has credibility in face of investors if the financial statements were audited. Yes, my work as a manager is good if financial statements are audited, and if in financial statements I present profit. Yes, I have 10 profit, but I don't know if it's a true profit. Then the theory of inspired confidence told that firms that were audited you as an investor, you can invest your money in a firm that have audited financial statements, and then agency theory. Yes, between them, having that agency theory, you know that you have between managers, agents, and principals, investors. And managers can be paid if they obtain profit or economic benefits. So, to have profits, they can increase the turnover with accounting schemes and fraud and accounting statements. But here comes the auditor. that certify if their work was done. The evolution. For example, in Romania, there is a professor in accounting that told us that we have accounting and proto-accounting. Accounting before Paciolo, yes, proto-accounting, accounting before Paciolo. And also we can consider that we have proto-auditing, auditing before auditing the work of Paciolo. Because we have in Babylon, in Bible, in Rome, and we have this concept, audio audit, when the auditor was interested to see if the fortune of the king or the fortune of the city administrated without frauds, yeah, the interest of the city. And the auditor search if there were any frauds. And then it comes in Agora, in a public place, and it presents his work. He was listening by the other, audio. From here we have auditing. But the modern auditing came from England. We have in 1550, United Kingdom, International Church of England, Wales, UK, Ireland. And then we have in USA the profession, the chartered accounting, proposed audit test and examination. Then we have audit standards that were supposed to improve the quality of the audit mission. And from 2002, there's a moment also at the European level, we have the 8th directive that was modified last year in 2013 with the directive 34, I guess. Okay, who can discuss about the auditor? What is an auditor? Yes, we know that it's a professional person. But first in accounting, secondly in law, in also in statistics, financial analysis. We have to have many skills. You will see that in auditing is not sufficient to know accounting. And in Big Four firms, part of the auditors came from accounting field, and part came from law. Because the most important part of the mission is about procedures, legal procedures. We have to complete for many papers. And for this, you don't need an accountant, because accountant has to manage with numbers and to examine numbers. But with this part, for the person that is involved. So, but here is a problem, because during the time from the evolution of the auditing, the profession had some problems, because there were some auditors that were paid to express good opinion, and that affects the audit report. So, for this reason, the auditor should be or should have integrity, yes, not to be influenced by the second part, the objectivity, to have objectivity, professional competence, to improve his level of connaissance, yes, in accounting and not only, and then professional behavior. But in this code of ethics, we don't see any mention regarding the profit. Yes? The job of the auditor is to express an intended opinion and not to make profit. Big Four firms make profit. So regarding the audit market, from this 8 directives that was modified, we have for audit profession good news. At the European level, the directives say that we should increase the level for statutory audit. What means that? That more and more things will be audited, because the problem of the actual economic crisis is the lack of transparency. So, what tells the regulation? If you want more transparency, you have to have audit for more and more firms. This is good for me as an auditor. The audit market will increase, so more and more audit is more and more audit. But at international level, the audit market is dominated by big four. And Young, PricewaterhouseCoopers, Deloitte, and KPMG. And also we have their offices here in Iași. They pay lots for okay, and regarding the diversification of services, the laws say that you can do legal audit, statutory or mandatory audit, but also you can perform other assurance services, as internal auditing, due diligence, financial analysis, that could be performed by auditors. Okay, and so we have his mission. The auditor should follow some specific standards, because as in accounting, we have standardization. Also in auditing, we have standardization. We have to respect some specific rules. For this reason, we have international standards on auditing that comes from United States. In the States, we have United States generally accepted auditing standards. And beginnings of 1970s, the European countries adopt, and then they modified the US audit standard. They were edited by IFAC, International Federation of Accounting, and they have a specific board that improves standards year per year. And those standards, they are categorized in some specific directions. For example, 200 section, we have general principles and responsibilities of the auditor. How you can assess risk. Yes, we have 240, the fraud risk assessment. We have this international standard on auditing 200 that describes how you can plan the mission and how you can assess control risk, inherent risk, and audit risk. Yes? Then, when you have a general framework, you can decide using this ISA 300 section how you can plan your mission, what are the resources, what are the most important ethical problems that would influence the audit opinion. And then you can assess, because the internal control is an important part, an important section in auditing. You can assess, you have to assess the influence of internal control to fraud risk or to errors. If you have a strong internal control in your field, then you can consider that financial statements were prepared respecting the accounting framework. Then you have audit evidence, because when you have to express the audit opinion, you have to obtain some proofs. And this standard, ISA 500 to ISA 580, describes the manner or the way you can obtain audit evidence, from analytical procedures to ratio analysis and other procedures. Then, for For example, you can, because nowadays firms use informatics systems to obtain their accounting numbers. So you as an auditor, you can use the work of other experts, person that knows informatics or statistics, I don't know. So this standard describes the procedure, the exact procedure that you have to follow in the audit mission. And then the most important thing of the mission is the audit report. And those standards is 700 to 706 describes the form of the audit report. What what should be the audit opinion? Because we have a different audit opinion. So the audit report, and you, if you will work on that, will get just, I don't know, 1 or 2 pages. Yes. And the most important part is this, the paragraph. And the audit report is signed by the auditor. And how it looks the opinion? Just, I don't know, 3 or 4 of those. And it says that, in our opinion, yes, me, the auditor, the financial statements of the firms that was audited truly present the fair and the true and fair view of financial position and performance. And that assures you that financial statements were prepared respecting the financial the accounting framework. Okay, how it looks, the opinions? You can have an unqualified opinion, and that is good. You have an unqualified opinion or a favorable opinion. Then a modified audit opinion. Yes, it says that, okay, financial statements present fair view regarding financial position and performance, but we have some problems. But and these problems in financial statements, they are under the maturity level. They aren't so important. Yes, but you, as a bank, you should have attention. But they aren't so important. And then you can have an adverse opinion. And you can see there, if the adverse opinion told you that financial statements don't present a true and fair view, and there is disclaimer of opinion because you, as an auditor, you can get sufficient audit evidence. Okay. And how can I obtain audit evidence? So we can use audit procedures from documentation, confirmation, and this audit evidence should be sufficient and appropriate. Sufficient as many as you can, and appropriate of the quality. And then procedures, so analytical procedures, you can use comparisons and financial analysis, financial ratios, confirmation, inspection, observation. Okay. And then we can discuss about the process of financial audit. And the first step is to obtain is to have the client, and you have to analyze if you accept or not the client. Because if you audit, if you will accept an audit mission for a client with a bad image, that also can affect your image. Yes? Yes, yes. And then we have to plan the mission, how many auditors, how much time, the periods when you have the inspection, information, and then 3 is about the mission, how you perform the audit, and then you evaluate the results and you have the audit report. And if we talk about, if we take the time into consideration, we have planning, performance, and then the final report. In the planning, you have to understand the client to assess his risk and to consider yes, the business risk, because this risk can affect the audit risk, the inherent risk, the control risk, and the non-detection risk. For example, if you in Iran, all the auditors have problems with the firms from I don't know, industry. Meat industry. They have problems there. I don't know why. And I talked with a professor from Iran, and she told me that it's a crazy to accept an education and it's risky. And also we have problems with corruption there. And it's a pressure for them to make an audit in this branch. Okay. And also to estimate materiality, because in auditing we have to look up in financial statements, but not to all the sums. You have to inspect, verify just the sums, the numbers that are up this materiality level. Yes? And for example, auditor should estimate this level of materiality. What is the most important number? Yes. And then we have to assess the risk of material misstatements that were caused by fraud or errors. Then we have the plan and test, because you have to test every material number in operation. Okay. And after that, if the firm uses an informatics system, you have to assess the control, the internal control, and the application, financial information application that were used to obtain financial statements. Okay, and regarding the transaction, you have to test some management assertions. The existence, accuracy, completeness, right obligation, and presentation and closure. And then for final sums, we have also to test some assertions. And finally, you have the analytical review, and this is made by the head of the mission, the senior worker partner. Okay. And then you have the report. But if you have identified some problems in financial statements, you as an auditor, you have to discuss with them to solve them. You have to modify this because it's not correctly. Yes? And if the client do this, okay, you will have an unqualified opinion. But if the client don't want to correct the numbers, yes, you will have an adverse opinion or a qualified opinion. But you as an auditor, you should talk with the client to present the fair numbers. And then you draft the report and you have your audit list. Thank you. Question? This is a good joke.
And give a fair and honest report also.
Because you need to have bilateral agreement, or you need to have an auditor that is agreed in this offshore auditing. I don't know, for a moment. I don't know.
Why should a table student learn how to do auditing? How could you motivate them to learn?
Simple audit is.
How much are you talking about? Give me numbers. Give me numbers.
I told you for American companies, the audit fees are very, very high.
For example, Professor Subertu's son wins about 3,000 euros per hour for consultancy. How much could you earn for auditing?
For example, in evaluating the due diligence of
Okay,
one merger
yes.
or
This is a contractor auditing, but it's also auditing because you start from numbers. Here, numbers are real, and then you have to decide the value of the company. But also, an important part is auditing. In Romania, the audit fees aren't so high. For example, yes, 25 euros per hour. But for Romanian context is a high. But I told you, for state companies that are listed on New York Stock Exchange, when I read the audit, the financial statement, because for U.S. firms, it's mandatory to present also the audit fees and the non-audit fees. So there are many euros. And for 240 hours minimum, you can do the ratio. Yes.
So if you look at for this combined this is provision for the company to
Yes.
financial statements from after sometimes is the same rules in Europe or in international or in only for US?
We have problem. We have, but also in states was this problem because audit firms they inspect and certify the financial statements, and also they have consultancy. And here we have a problem with independence. And so in 2002, but with application in 2003, we had this law Sarbanes of Lake Act that told that the author couldn't perform consultancy for the firm. And also in Romania it is the same. And also in the Euro. The 8th directive imposed and mandatory for a firm to have a legal auditor, but for consultancy it should have another partner, another. But here is a break again because yes, Romanians and Europeans they found a solution. The standards told that the partner is the one to sign the report. The partner assumes. But for example, if you have an audit client and yes, you sign for 10 million euro audit fees. So the client came to Ernst & Young, signed the contract, and Ernst & Young should perform the audit mission. But here is a gap, as I told you, in the ethics code, because the ethics code don't say anything if another partner from Ernst & Young perform consultants. Don't say anything. So you can change the partner, the person who signed. And for example, you came to Ernst & Young, and you have Ernst & Young partner that signed the report, and Ernst & Young partner that performed the consulting. But in Romania, the things are more inventive. For example, Big Four, that came here, they yes, we have PricewaterhouseCoopers model. And in Romania, we have PricewaterhouseCoopers Consultancy and PricewaterhouseCoopers Assurance and Auditing. Two different firms. From the same audit and PricewaterhouseCoopers Assurance, they perform the audit mission, and PricewaterhouseCoopers Consultancy, they no problems with ethics code because they are different. The legal, you have two different firms, but it's not ethical. But this is the problem.
Are the services of a Romanian consultant in recognized in the European Union or outside For example, if you offer services as consultant,
Okay,
are
yes,
your
yes.
signature recognized in the European Union or outside?
Yes, we have Romanian Chamber of Financial Auditors that is recognized in Europe as agreement. What?
So,
Oh, okay.
I just try to remember the auditor of Lehman Brothers,
The audit.
the audit
Yes.
house company for Lehman Brothers. Or
Just
that doesn't
No,
that doesn't exist.
No, the Lehman Brothers was audited by Super, I guess.
Yes.
Yes, I guess.
And it's still alive.
No, Pricewaterhouse still exists because also in audit report we have a problem there. Materiality. What means materiality? And in compounded, okay, standards say that auditor should use his professional knowledge. And this is very yeah, for materiality. Because they express that, they say that, okay, for what's materiality, we didn't find anything with that. But how do we really calculate this materiality level? And what means materiality for a firm as Lehman Brothers? And what means materiality for a small firm? For example, $1 million for Lehman Brothers is nothing. $1 million for a small company is material, and that was their I don't know, ask. Yes.
It's sleep. Advantage.
Yeah, right. Legal.
And who audits the auditors?
The profession. Yes. The profession body has also a council that also have some rules, specific rules, some audit quality, standard on quality of the audit, because they have to, and annually, audit firms are examined by specific auditors that don't have business in practice. They just audit, yes, and they give them marks. If they have an A, yes, next year they can perform another audit. But if they have a D or C, they have to improve their techniques, or they don't have, they lose their license.
So what happens to the reports that were given for the year when they were declared as not being the person?
Okay.
Are they still available, still valid, or they have to retake?
Is valid for who? Because if investors decide or found that the report was performed with corruption, or I don't know, this investor can decide to propose to have another audit
Paid by who?
paid by the firm, because audit fees are cost of the firms.
But isn't this a gap, because legally when you ask for an audit report from a company which is which got a C mark,
Okay.
and you pay a certain fee, and after that at the end of the year they are declared as being C, but they misleaded the company that requested for an auditing report as being the best, A or B. So isn't this illegal?
If the second auditor found that there were some problems with the audit report, yes, the investor can proceed. The first auditor and the firms can recover the money. No.
About the whole question, I heard that the auditing council is not really independent, like members of the Big Four
are taking part in
For
supervision
example,
of the Big Four.
this is
yourself.
this is also growing in Romanian conflict because big four companies they have strong influence in local bodies or national bodies, and they want to follow their rules. Yeah. But also, for example, for the Romanian context, we have also the influence of the Ministry of Finance. And there are some experts from industry that analyze the work of directors. They have discussions with big four firms and practitioners. They, the big fours, yes, they want to follow their rules.
Is the problem that there are only four?
In the past, they were eight. But yes, it's a problem because we don't have any more auditors, and we talk about one. Yes, it's a problem. But even in Romania, before are five. And if you have another one, yes, it's a problem, but it's an advantage for the profession because big four firms they develop their own procedures and they improve the audit mission. But in this part of development,
if we want an audit, we can only ask some of these big four, or we can ask somebody else to perform this audit.
financial
Maybe
auditor.
for less
You can-
amount of money.
you can just to certify financial auditor that is recognized by a body. Normal. Because yes, if he wants to do an audit, he has to be recognized by normal an association.
But
You
the
know?
quality differs because maybe a member of big
Yes
four
or no?
can perform
Yes
a
or no? For
better
example, some banks want audit reports from a big four company. So they say yes, it's big, and this big four company can't be influenced by a small client. Because company from big four, it is independent in money, and he can express an independent opinion. But a small auditor, yes, he can be influenced.
If there are no more other questions, thank you, Bogdan, for the presentation.
Thank you also.
We will come to you when we will need consultancy. That was the main idea that I understood. Okay. And you will take us a big leap, but maybe we can get to an agreement. And as a sign of appreciation, I'd like to offer you a certificate recognizing your work made here within the project for the full lecture that you have, and also for the other support in that you offered us during the implementation of the project. Thank you very much.
Thank you.
We will invite you on to another project to cover our insight and also your consultancy. Two more things. Firstly, please be patient and come back with me and to make another photo